Chamath Palihapitiya. This opportunity is bigger than Bitcoin in 2012. The CEO of Social Capital, Chamath Palihapitiya, is well known for his philosophical thoughts and Twitter tirades. Silicon Valley's tech mogul and co-host of the podcast The All-In frequently discusses issues like income disparity, social justice, and the underrepresentation of minorities and women in STEM industries. In a recent interview for the Wharton Private Equity and Venture Capital Club Fireside Chat series, Chamath discusses a wide array of topics related to technology, energy, investment, the condition of the economy, and the two main drivers or boundary conditions of the next decade, all of which, he predicts, will generate a wave of new trends and opportunities greater than Bitcoin in 2012. Hello and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we start, make sure to leave a like, subscribe, and comment below if you enjoyed watching this video, and turn on the notification bell to keep posted. For over a decade, zero interest rates were the norm, and Chamath claimed this profoundly distorted the market. This caused a distortion of reality by opening the door for manias and asset bubbles to develop in every single sector of the economy. Low interest rates mean lower returns on savings accounts for investors, which might lead to greater consumer spending and boost high-growth investments. According to Chamath, the central bank's free money distribution caused a misallocation of risk, which prompted many individuals to overestimate the risk associated with their investments. Moreover, as per Chamath, as one takes a look into the future, the next issue that naturally comes to mind is this. If the Federal Reserve continues to raise interest rates and most likely maintains these higher rates over the course of the next several years, will there be platform-level jumps of bits and atoms that correlate with the new interest rate regime? Although there have been many successful and unsuccessful tech companies over the past 6 decades, Chamath argues that we can still see a consistent pattern that led to the emergence of new groups of innovators. Big technological advances may serve as launchpads for brand new businesses. Also, he offers advice to business owners, IT enthusiasts, investors, entrepreneurs, and individuals trying to find their place in this fast-changing economy. Furthermore, Chamath asserts that central banks switching to zero interest rates has been the greatest global shift that has resulted in almost all the instability you see today. Looking back to the 1960s, 1970s, and 1980s, you realize they were incredibly coordinated. Hence, in order to solve significant issues, remarkable new technologies had to be developed, and there was a great deal of collaboration, which was first driven primarily by governments. But it was in a society where capitalism was allowed to operate naturally, and there were essentially checks and balances in place. We did not shy away from the fact that there were victors and losers, even if doing so would have been politically wrong. However, Chamath contends that this is no longer the case. There can be no losers in today's society. Everyone must succeed, and no business should ever fail. Moreover, every hypothetical area of the economy might receive a bailout, and all of that was made possible because in 2008, during the height of the global financial crisis, we broke the glass by reducing interest rates to zero. Instead of raising them, we abandoned the system, which led to a cessation of cooperation. What's fascinating about this is that it happened at the same time when technology businesses utterly outperformed every other company. It was a situation where there was still room for truth. Chamath further remarked that tech businesses are unique wherein you can clearly see who the winners and losers are. Hence, Chamath claimed government and non-profit organizations used to be highly effective mediums for advancing things. Nevertheless, in today's world of near-zero interest rates, they no longer suffice. In today's society, if you want to build a successful business, you have no choice but to use various forms of technology extensively. This is because any issue can be resolved using some form of technological advancement. Furthermore, making money is a given while doing this, so to be socially progressive and do anything of importance, one must accept and even embrace the advantages offered by capitalism and modern technology. If you're looking to be successful in the next decade, knowing that the marginal cost of energy is heading to zero is priority number 1. This is made possible by the expansion of low-carbon energy sources like solar and wind, as well as moderately intensive ones like natural gas, all of which operate to provide energy that quickly approaches almost zero per kilowatt hour. The second is that instead of using a CPU to calculate and solve computational problems, we now use devices called GPUs and FPGAs. OpenAI, a Silicon Valley-based company, has created DALL-E and GPT-3, both of which represent significant advances in artificial intelligence. These are programs that allow you to type in phrases like, "a frog in the glass," and have them translated into images, or "write me a novel," and it'll write one for you. Similarly, Chamath describes the market by comparing it to a train going up and down a hill. In addition, he discusses interest rates and discount rates, including how they impact big businesses and startup companies. He emphasized the need to pay attention to how the boxcars are set up. The computer trading algorithms are the boxcar at the front of the train, controlling the early momentum, form, and motion of markets. Then, the second boxcar includes hedge funds and hard money long-term loans. Lastly, retail is located towards the rear of the train. And if you keep an eye on how hedge funds are positioning themselves over time, you can sort of predict where the markets are headed. Additionally, if you combine that set of data with the current state of the volatility index, you can fairly predict what will happen next. In addition, according to Chamath, many individuals are unaware that zero interest rates triggered many of these actions. If interest rates are now 4, 5, or 6%, the most crucial thing for you to grasp as a business leader is what those numbers mean for your company and how they will affect it. Chamath pointed out how extremely important it is to be financially numerate. Moreover, you can be considered a good company manager if you genuinely understand that the discount rate influences your terminal value. If you can understand this concept, you will be successful. Chamath later remarked that expanding at a rate of 50% is actually preferable to growing at a rate of 150% if the latter expansion does not result in increased profitability. No one ever considered the possibility that this was correct since we were never subjected to conditions that compelled us to acquire such knowledge. While there is a strong correlation between the availability of risk capital and the formation of new startups, interest rates are being lowered in both ways. Consequently, having access to free money might act as a headwind to long-term success. Because rather than concentrating financial resources on a few promising ventures, it tends to distribute cash and skill too unevenly throughout a larger group of firms. As a result, when interest rates are low, competition thrives, talent is dispersed, and input expenses such as labor and advertising go up. Yet, the likelihood of any company thriving goes down. Conversely, the market is becoming overly eager to reward a single dollar of sales growth with multiple dollars of incremental enterprise value. In this sense, firms are incorrectly incentivized to expand at whatever cost. However, this encourages unsustainable growth patterns, which is what we are currently witnessing. These models are incredibly difficult to break out of, especially when governing structures like interest rates shift. According to Chamath, a massive surge of new trends will emerge once the marginal cost of computing and energy reaches zero. When these two tendencies are combined, no problem seems to be too expensive or difficult to address. According to him, we are already starting to see the green shoots with CRISPR and AlphaFold, but the world will continue to expand enormously as scale, affordability, and availability improve. Lastly, Chamath stated that while making risky startup investments, it's crucial to remember that boundary conditions should always be present. But history has proven that it may be a highly profitable time for both investors and innovators if the three boundary conditions, a new bit platform, a new atom platform, and sustained above average rates are satisfied. Hi, we hope that you've enjoyed watching this video and learned something valuable. Please like, subscribe, and hit the notification bell to keep posted with our videos. This is Finance Sense, helping you stay current on all the most recent changes in the financial markets and economy. Stay safe and look out for the next video.